Hello, guys, and welcome to my course. My name is Jazz. I live in London, and for the past 6 years, I've been working at a top investment bank where I spend a lot of time researching and understanding companies, how they do business, what industry they operate in, what is the competitive landscape in that industry, how's the company management, are they running the business the right way. And my job is to basically recommend, based on my views and thoughts, if the company is one with good future prospects and worth investing in or not. I remember when I started, this was an area which everyone said was super difficult to understand, and it would take months and months before you become an expert because you're not an accountant or a financial expert. And what I've come to realize in the past few years is that while some of this is true, I do think that everyone can get a very good basic understanding of these concepts without having a background in this area. And this is why I wanted to make this course. Um, my goal is to go over some of the key concepts that I learned along the way and which I think are fairly intuitive and easy to understand. And I think you'll really enjoy this course. So, what are we going to cover in this course? Now, when analyzing a company, one of the key things that an analyst looks at are the company's financial statements. This is where the company reports how they performed this quarter, how much revenue they made, how much did they spend on salaries, on rent, on buying raw materials, what was their profit. And so over the next few videos, I'll be giving you an overview of these financial statements and the three main reports that are a part of them. And these three are what you can see on your screen: income statement, balance sheet, and cash flow statement. Now, the way I'm planning to go about this course is I'll be covering these three sections one by one along with the constituents of these sections. And at the end of the course, we'll do a fun exercise where you'll just pick up a report of any company you like, any company you love, whose products you like, whose burgers you've been eating since you were a kid, or whose clothes you love. And we'll do a nice project on that to assess our performance. So, before jumping right into this course, I thought I'll spend some time just discussing why is this important? Why is learning this important? And where is this even used? So, talking first about why it's important, it's because financial statements give company management and the general public and the investors who have provided funding to the company a very good idea of how the company is doing. So it's a very good yardstick with which the financial community can assess the performance of a company. They can see both: has the company been doing well in comparison to the previous period and versus its historical performance, but also very, very importantly, how is it performing versus its competitors? Is the trend that we're seeing in the financials the same that we're seeing in the other financials of the competitors? Does that trend make sense? So essentially, financial statements are a very good tool to assess a company in this perspective. Now, where are these used? The simple answer is it's used everywhere across the world. It does not matter whether it's a corporate or an NGO or a government agency, or whether it's in the US or the UK or Europe, wherever it may be. Every single company prepares and presents financial statements. So this is something that's everywhere, all around us, and hence it really would help us if we have a good basic understanding of how this works. And with that, guys, let's get into this course. Like I mentioned, I think I've kept this course very high level and easy to understand, and not, go into too many technicalities which accountants love to go into. So the idea is to give you a very good basic understanding. With that, let's get into it. So let's have a look at this, guys. So here Apple has presented its financial statements. The first statement we see here is their income statement. On the second page, we have their balance sheet. And on the third page, we've got their cash flow statement. Now we're going to go through all of these one by one, but first let's start off with their income statement. Now, they've put a nice disclosure here that all the numbers in this report are in millions. So this first number that you see, 79,104 millions, means 79 billion. Of course, companies typically do this because they don't want to put, you know, 6 different zeros at the end of every number. So that's one. And the second thing to note here is that these results are for the 3 months ending December 2019. So basically, this report is from September, starting September, all the way till the end of the year 2019. So the last 3 months of the year. Yeah. Now, let's talk about the individual line items here. And it's fairly easy and simple to go through with this, but let's just go by it one by one. So first thing we've got is net sales. And it says here that Apple made $91 billion of revenue in the last 3 quarters of 2019 versus 84 billion in the same period last year. So that's good, right? They've made a lot of money this year, a lot more money, a lot more billions this year. And you'll see here that they've broken down their sales into products and services. So what is this? So product revenue is essentially how much they have made selling Apple's different products. So, Apple sells the iPhone, the iPad, the MacBook, iWatch, several different products. So this number right here, the 79 billion, is what Apple has made in this quarter from the sales of all their products. The second line we have here is services. And that's basically stuff like Apple Care, for example. So I don't know if you've broken your phone, your Apple phone, but if you go into the Apple shop, then there'll be some Apple Care genius who'll fix your phone and charge you a lot of money. And it's effectively, this is a kind of service that Apple provides to its customers. iCloud is another example of a service that Apple provides to its customers. So you'll see here that the combination of all those services for this quarter amounted to about 12.7 billion. So the sum of those two items gives us 91.8 billion for this quarter. So now let's go into the next line item that we have here. And what is that? That is cost of sales. So what does this basically tell us? This tells us how much it actually cost Apple to make its different products. So to make its iPhone, to make its MacBook, and so in order to make this revenue, this huge 91.8 billion, how much did it actually cost Apple to make its products and to provide its services? So you'll see that the cost of sales, again, similarly to net sales, is broken down into products and services. So in order to make Apple's different products, in order to make its MacBooks and iPads and iPhones, it costed Apple 52 billion. And in order to provide the different services, it costed Apple 4.5 billion. And the sum of these two things is 56.6 billion. So now if we go into this next item here, which is a very important line, it's called gross margin. And gross margin is effectively the difference between the total net sales and the total cost of sales. So if you think about it intuitively, all this line is telling us is if you take the difference between the total sales or the total revenue that Apple made, and if you subtract from that the cost of all the products and services that it provided, you come up to gross margin. So guys, let's go into these operating expenses now. So we've got two items here. We've got research and development, and we've got selling, general, and administrative, which is shortened into SG&A in accounting terminologies a lot of times. So alongside cost of sales, Apple also spends a lot of operating expenses. Now, what are these operating expenses? Talking about selling, general, and administrative first. This is effectively expenses such as worker salaries and all the expenses associated with running Apple's day-to-day operation. So Apple's got so many stores everywhere across the world, so many offices. It costs them money to run this massive operation, right? They have to pay salaries, they have to pay rents for the properties that they own. So this item or this line effectively includes all of those expenses. Now, research and development is another line here. And what is this effectively? So if you think about a product like the iWatch or the MacBook, Apple typically spends years and years into building these products. They've got technicians, engineers who are burning the midnight oil, coming up with the new ideas to develop the next product. And so this item includes all of that technological expenditure that Apple has made in order to build these products, and they categorize it as research and development. So both of these items, research and development and SG&A, are together lumped as total operating expenses right here in this line item. And you'll see in this quarter they spent about 9.6 billion. So guys, with that said, let's go into operating income. So what is operating income? So if you'll remember from a couple of videos ago, we calculated the gross margin of Apple. Now, the gross margin was the difference between the total net sales that Apple made this quarter, and we subtracted the total cost of sales or the total cost of the products and services to come up with the gross margin. Now, from this gross margin figure, if we subtract the total operating expenses, we come to operating income, which is effectively the difference between this 35.2 and this 9.6. Now, this is a very, very important metric, guys. If you want to know if a company is profitable and making money, this is the first thing that I personally look at. It's not the revenue, it's not the gross margin, it's the operating income. Because, even if a company is making $100 billion, if it's costing them $102 billion, right? If you sum up their total cost of sales and their total operating expenses, if that's coming up to 102 billion, then even if they're selling 100 billion worth of products, they're still making a loss. So personally, this is one thing that I am very, very much focused on. And what I have realized is possibly one of the most important metrics that you should look at and focus on. So let's keep going, guys. The next two line items we have is other income / expense and income before provision for income taxes. I'm not going to spend too much time on other income / expense because it's a small number in the context of Apple, even though it's a $349 million number. But effectively, you'll see a lot of items which a company categorizes as other income or other expense, and we'll see later they'll call it other assets or other current assets. What these effectively are a bunch of different income or expenditure items which are small in the broader scheme of things. And so what a company does is effectively lump them all together and call them other income / expense. Now, the reason why companies typically do this is because if they do not do this, they would effectively have to put down each and every expense or income as a new line item, and effectively that would lead to pages and pages of disclosure. So to simplify things, they typically combine some of these small expenditures down or income items down together, lump them together, right? So when we sum up the operating income and this other income slash expense, we come up to 25.9, which is the income before income taxes, right? And now let's talk about taxes. Just like you and me, Apple needs to pay taxes. This is effectively an expense that they need to pay to the government for the profit that they've made in this quarter. So as you can see here, Apple is expected to pay around 3.7 billion in taxes this year. Now, if we subtract the taxes from the income before provision for income taxes, we come up to 22.2 billion, which is our net income. This number effectively shows us the profit that Apple has made in this quarter, including all of their expenses and all of the taxes that they've paid in this quarter. So with that, guys, we've covered all the main items in the income statement. Before moving on to the balance sheet, I want to spend a little bit of time discussing with you the interpretation of this income statement. How would I think about this income statement? So if you look at what Apple made in the same period last quarter and compare it to this quarter, you see that Apple has sold more products and sold more services this year. That's a good thing. The second thing that you see is that the cost of sales has, which is this number, has also gone up, which is fairly intuitive because if you think about it, if a company sells more goods and services, the amount that it would cost to make those goods and services would also go up, right? And if you go down the line items, you see that this, in a fairly intuitive way, also shows us why Apple has made more operating income in this quarter. So it's fairly, I think, intuitive to understand the mechanics of the income statement. But what's very interesting and the key takeaway for me from this statement is how profitable a company Apple is. It's an incredibly profitable operation that they're running, and which explains why they're paying such hefty amounts in taxes in each quarter. If we have a quick look at the other items on the income statement, I don't want to spend too much time on this section right here, because this is effectively something that I want to cover in a future course, because this is a little bit more complex and I don't think it's necessary to understand this at this stage. But if you guys are interested, we can definitely cover it in a future course. This part at the bottom of the income statement is super interesting. What is this? If you remember this number right here, this 91.8 billion, Apple has been kind enough to split this number by different geographies and also by different products. So here what Apple is basically saying is that most of their revenue has come from the Americas, and then Europe is the second biggest contributor, followed by China. So it's very interesting because a lot of times what analysts do is they want to try and understand the evolution of Apple's geographic revenue mix, because they're trying to understand what are the other geographies that are coming up. Are there some trends that are emerging that other companies or other analysts have not picked up on? So this is a fairly important piece of disclosure. The other one is net sales by category. So you'll see here that, not surprisingly, iPhone is the biggest cash cow for Apple. Out of the 91 billion, more than half of it is on the iPhone. Now, this is another very interesting piece of disclosure, because if you think and analyze the evolution of this number over quarters and over several years, it can sometimes give you a very interesting theme and a very different and a sense of how Apple's mix of revenue from different products is emerging or is evolving. So it's another interesting piece of disclosure. But with that, guys, effectively we've covered the income statement. I hope this has been fairly clear to you. Um, I am, however, available for any questions or queries that you have, so please feel free to reach out to me personally, or you can reach out to me in the comment section here. But with that said, let's move on to the next section. All right, guys, now let's move on to the balance sheet. Now, what does the balance sheet basically show you? It basically shows you what a company is worth. When we think about a company's net worth, all we're saying is that if we sum up all the resources of the company, also called assets in accounting terminology, and from that number, if we subtract the total value of the money the company owes to different people or different suppliers, different other companies, if we sum all of that up, also called liabilities, then we get to their net worth. So a simple way to think about this is total assets minus the total liabilities gives you total equity or the company's net worth. So with that said, if you have a look at Apple's balance sheets, what you will see is that the company has divided this into two sections. One is assets, and the second is liabilities and shareholders' equity. Now, let's start off first from the different assets or the different resources that Apple reports on its balance sheet. These are the items from which Apple will derive profit or benefit in the future. So let's go over them one by one. Firstly, when we go into the assets and also within the liabilities and the shareholders' equity, you'll see that they are divided into two sections, current assets and non-current assets. Now, what are current assets? Current assets are the cash and other resources which Apple can sell within a period of less than a year and convert it into cash. Non-current assets are the resources that Apple has which it will not be able to convert into cash in a period of less than 1 year. So this is the way that typically a balance sheet of a company is divided. Now, if we talk about the different items within the current assets, we've got cash and equivalents. This is all the money that Apple currently has in their bank account. Now, this is an asset because Apple can use this cash to buy a new factory, allowing it to make more money in the future, or to go out and acquire some competitor. So it's a very useful asset to have, which is why it's an asset. So we can see as of the end of December, Apple was sitting on around 40 billion of cash. Next, we've got marketable securities. Now, what are marketable securities? These are financial assets like stocks or bonds, which effectively Apple buys instead of just holding cash. Why would they do it? Because it's not very efficient to just hold cash all the time. Marketable securities effectively give you some return on that cash. But these are very liquid securities which Apple can quickly sell and get cash for if needed. So you'll see here that Apple actually has around 67 billion of marketable securities. So if we keep going down, the next item here is accounts receivable. Now, what's accounts receivable? Say Apple has sold an iPhone or has provided a service to a customer, but they haven't yet received the money for it. An example of this will be, for instance, Apple has sold an iPhone to some retailer or some corner shop company. Apple hasn't charged these companies yet, but once these companies sell Apple's products to different customers, they will receive the cash from these customers and then pay this back to Apple. Now, what happens once these accounts receivable are received? They become cash and they hit right here. And accordingly, you see that the accounts receivable reduce and the cash increases. Another concept very similar to accounts receivable is vendor non-trade receivables. I don't want to go too much in depth into it because it's similar to accounts receivable. The only difference here is that instead of, this is basically not money that Apple is owed from its retailers or its other partners. Instead, it is the amount that Apple is due to receive from its suppliers or the companies or the partners which help Apple make its products. Now, the next item here is inventories. So what are inventories? Inventories is the value of the Apple products that are sitting in its showrooms or in its warehouses. So imagine going into any Apple shop and you'll see a bunch of different iPhones, MacBooks, iPads just lying around available for sale to the public. This is effectively called inventory in accounting terminology. And other current assets is a sort of catch-all term, which includes all other items which are also assets, and Apple has sort of lumped them together in this sheet because some of them are quite small to be listing on their balance sheet. So effectively, if we sum all these items up, we come to total current assets, which is around 163 billion. Pretty stable when we compare it to the number from last year. Now, moving on, we come into non-current assets. And remember, these are the assets or resources which Apple owns, which cannot be monetized into cash in a period less than 12 months. Now, within this, the most chunky category you will see is marketable securities. Very similar to marketable securities under the current assets, Apple has invested a huge chunk of money in financial assets, which it has invested for a period of more than a year. Now, companies will do this for several years, but typically for Apple, what effectively this means is they do not think that they need this 100 billion of cash in the next 12 months. So because they don't need it, what they're effectively doing is investing it in the financial markets to get some sort of a return from these assets. The next item here is plant, property, and equipment, which is a very, very important item. And this is one of those items which you'll see in every single financial statement. Now, what are plant, property, and equipment? Plant, property, and equipment is the value of all the factories, all the warehouses, all the property that Apple owns. So if you think about a company like Apple, it has such a huge presence globally. It's got offices in the US, in Europe, in China, in India, all across the world. So if you sum up the value of all those properties, all of that, all of those warehouses that Apple owns, it's roughly 37 billion. And similar to the other current assets above, other non-current assets is again a similar catch-all or a lumped up figure for all of these other small items which Apple does not want to list one by one, so it's just lumped them together. So if we aggregate all of these non-current assets, it comes up to 177 billion. Now, combining the total non-current assets and the total current assets gives us a picture of the value of the total assets that Apple has, which for the period ending December 2019 was a huge $340 billion. Let's move on to the next section, which is liabilities and shareholders' equity. Similar to assets, liabilities can also be lumped into two categories. One is current liabilities, which is effectively the money that Apple owes to different counterparties, to different companies, to different people in a period of less than 12 months. And non-current liabilities are those amounts and obligations that Apple is due to pay to people, but not in the immediate 12 months, but beyond it. Now, similar to the section above, let's cover off all of the liabilities. Accounts payable. Accounts payable is effectively the money that Apple owes to its suppliers and to the companies that work for Apple in helping them create their products. So think of this as money that Apple owes to some supplier or some factory in China where a company is helping them make its products. So they owe that company 45 billion. Other current liabilities is again a similar item to the ones that we've discussed above, where a lot of different liabilities that Apple owes have been lumped together. Now, typically what the other current liabilities includes can be a bunch of different items like taxes, which are not immediately due, but will be due in the next 12 months. With that covered, we're gonna talk about some of the most important items in the liability section, which is a combination of commercial paper, term debt. So let's talk about these. So, in order to build a big business such as Apple, it needs money from the financial markets. You can either raise money from the stock market, or you can raise money from the debt markets, or you can go to a bank to give you money. So, in the case of Apple, it has a total debt of 10 billion, and it has commercial paper, which is another kind of debt of around 5 billion. So if you sum those up, it basically tells you that around 15 billion of debt is what Apple has raised from the debt markets to build its operations. Now, if we sum up all of these liabilities, which are due in a period less than 12 months, it comes up to 102 billion. Similarly, let's talk about the next section here, which is non-current liabilities. Again, we've got term debt here and other non-current liabilities, which in the case of term debt is the debt that Apple has borrowed from banks or from the financial markets, which it does not owe the lenders in the next 12 months. So it can be owed in 2 years from now, 3 years from now, 5 years from now. But for financial reporting purposes, we describe it as a non-current liabilities because it's not due in the next 12 months. Other non-current liabilities is again a catch-all figure, and this can be any tax which Apple owes in a period which is beyond the next 12 months, for example. But again, this is a catch-all figure which can include a bunch of different items. So let's look at this now. If we sum up all the liabilities, if we sum up the total current liabilities, which are 102 billion, and the total non-current liabilities, which are 148 billion, we roughly come up to 251 billion. Now, what is the point of all this? We've calculated the total assets, we've calculated the total liabilities. What is this telling us? If you remember the equation that we covered at the beginning of this section, the total assets minus the total liabilities tells you what a company is worth. So if we subtract 251 from 340, we basically will find out what Apple is worth, or what is the net worth of Apple. And that's this line item right here called total shareholders equity. And that number is 89 billion. So what that effectively means is that Apple has a net worth of 90 billion. If someone came out and made an offer for Apple, then this is what the company would be worth. So guys, with that, we've covered broadly all of the key elements on a company's balance sheet. And specifically, we've covered the key assets that Apple reports on its balance sheet and the key liabilities that reports. Now, similar to the income statement, I want to spend some time really interpreting and trying to explain to you what I see on Apple's balance sheet. Because at the end of the day, these are just a bunch of numbers, but if we really have to drive some insight into Apple's business, we need to think about the interpretation of these numbers. So let's talk about assets first. Talking firstly about numbers, 340 billion as an asset base is huge. Apple is amongst a handful of companies, maybe 4 or 5 companies globally, which has such a huge asset base. It's a massive company, one of the biggest in the world. So that's one. The other key thing that you'll see, which is very interesting, and in this regard, Apple is unlike a lot of other companies there, is the percentage of total assets that Apple has in cash and marketable securities. So if you sum up all the cash and marketable securities that Apple has, this is roughly almost $200 billion. So this gives you a good sense of how cash generative a company Apple is. And if we go a step back and look at the income statement, you'll recall that that Apple actually generated 22 billion of net income just in this quarter. So it gives us a sense of the cash generation capacity of this company. Now, similarly, if we go into the liability section, we see that Apple does have a significant amount of debt. It's got commercial paper and term debt of about 15 billion, another 100 odd billion of non-current debt. So that's a huge amount. But if we think about it in the context of the total asset base, it is not an amount which would be burdensome for a company such as Apple. For a normal company, having a debt of $100 billion would be enormous. But because Apple is such a cash generative company, this is an amount which is bearable for this company. Now, if we talk about the total equity of the company, or the total net worth of the company, which is 89 billion, this gives us a very good sense of what Apple's accountants value the business at. So this total equity number gives us a sense of the company's net worth. Or if a competitor or any random company came out and said, okay, we want to buy Apple, what would it cost them? It would cost them at least $100 billion. In reality, it would cost them a lot more, but the book value or the accounting value of Apple's business is $100 billion. Now, as you can imagine, there are not a lot of companies out there that can pay $100 billion for a business. Again, this goes back to the size and scale of this business and how enormous and cash generative and revolutionary a company Apple is. So, with that, guys, let's move on to the next and final report that Apple presents on its financial statements. And this is the most interesting statement for me. And if you really want to understand the nitty gritties of a business and really understand what is going on, then this is the statement that you should look at. Because this statement tells you what is the money that Apple is actually making, right? This report, called the cash flow statement, reconciles your income statement with your real bank balance. So, what this report actually shows us is what are the different activities that Apple has done during the course of this year that has moved cash in and out of its bank accounts. And the goal of this report is to add up all of those activities that have moved cash in and out of Apple's bank accounts to give us one net number, which you will see right here, called increase decrease in cash equivalents. So this is the goal of the cash flow statement. It shows us all the money that's moved in and out of Apple's bank accounts. Now, the way that this report is broken down is that it's broken down into three sections called cash generated by operating activities, cash generated or used in investing activities, and finally cash used in financing activities. So what we'll be doing in this section is just going over these three sections and talking about the constituents of these three items. So, what's cash flow from operations? The first thing that I would say is that it is a concept which is very similar to net income or profit. And actually, when you will see how the cash flow from operations is calculated, you'll see that it actually starts from net income. And this net income comes from where? The income statement. So really your cash flow from operations, the first step that you start off with is your net income. Now, there are a bunch of different items that we need to add and adjust to allow us to arrive at the cash flow from operations. So you'll see here that net income was 22 billion and cash flow from operations was 30 billion. So there's about 8 billion out of items and expenditure that we'll just be discussing over here. So what are these items that have driven this difference? I'll focus on the main item here and the item which typically drives this difference between net income and cash flow from operations, and that item is the one right here called depreciation and amortization. Now, what exactly is depreciation and amortization? Depreciation and amortization, or which is typically shortened as D&A in accounting terminology, is an expense which is typically included in the income statement. It'll typically be included in the cost of sales, and it's added to the total expenses, and it reduces the revenue on the income statement in order to calculate the net income. However, D&A is not a real or cash expense. Now, what do I mean by this? So, say Apple has a huge factory which cost $10 billion to make. and say the factory has a life of 20 years, meaning after 20 years, the factory will be worth nothing. So, what the accounting standard says is if you divide 10 billion by 20, you get 500 million, and this is the amount by which your property depreciates each and every year. Now, the accounting standard allows companies to deduct this depreciated amount from their revenue and include it as an expense on the income statement. However, when it comes to the cash flow statement, we are concerned by the items which actually move cash in and out of Apple's bank accounts. So, because depreciation and amortization is not a real cash expense, we need to firstly add this back into the net income. And this is effectively what Apple has done right here. So we had net income right here. We add back the depreciation and amortization of 2.8 billion. Next off, we have all these different line items, which I won't go into too much details um, because it'll become an unduly long discussion, and that's not my goal here. My goal here is to give you a good high level understanding and explanation of how these three statements work. But as a point of reference, all of these expenses are, which you see here, are expenses which are lumped together and called working capital. This is the amount that a company needs to run its day-to-day operations. In the case of Apple for 2019, if we simply sum up these amounts, we see that it's roughly around $5 billion. Or this is the amount that Apple has generated from its day-to-day operations. So now that we've discussed depreciation and amortization, let's have a look at all of these other items. Now, I'm not going to go into too much detail and discuss all of these items because this would require having a very detailed discussion, and my goal is to keep this high level and to give you guys a good sense of the three financial statements. So what I will say is that similar to depreciation and amortization, all of these expenses which you see here are other income or expenditure items which are non-cash in nature, meaning they did not actually lead to cash moving in and out of Apple's business, which is why these are being adjusted out of your net income. Now let's talk about this section here. This section is typically called the working capital section. And again, without going into too much detail, it gives us a sense of the money which has been generated as a part of Apple's day-to-day operations. So if we sort of simply sum up some of these items, we'll see that it's roughly around 5 billion odd of working capital, which has been an inflow of cash for Apple in this year. Now, let's move on to the next section, which is investing activities. So the main thing to focus on here is an item called payments for acquisition of property, plant, and equipment, commonly called PP&E. Now, this is one of those items which you're going to see in pretty much every company's financial statement and every company's cash flow statement, and it tends to be one of the most important parts of investing activities. Now, what is this? This is the expenditure that Apple has made on a new factory or a new research and development plan, or the expenditure that it's made on the wear and tear of its existing plants to keep the condition of the buildings up to scratch. So in this year, Apple has spent around 2.1 billion on both building and maintaining its PP&E. The other item which you see here, which is a pretty big item, is 37.4 billion, which is purchase of marketable securities. Now, if you'll recall from our previous discussion on the balance sheet, Apple generates so much cash each year, and it has so much cash just sitting on its bank accounts. And what would be the best use for Apple of this cash? Does it make sense to just leave it on their bank account, or does it make sense to invest it in some money market or financial market instrument? And so in Apple's case, this is exactly what their business team is doing. It's buying, or it's putting Apple's cash in a bunch of marketable securities or financial market instruments for 2019, and this amount was around 37.4 billion this year. So I think you can slowly see how the different items on each of these financial statements actually links back to each other. If you look at some of the other items that Apple has included on its investing activities, we'll see another one being proceeds from sales of marketable securities, which is a concept which is somewhat similar to the purchase of marketable securities, but in effect, proceeds is the exact opposite, meaning Apple liquidated or sold their holdings of some financial assets to get 7.2 billion into their bank account. Now, payments made in connection with business acquisitions is pretty much like it says. This is the amount that Apple has paid to buy up new businesses. And with that, guys, we've basically covered all the key items in the investing activities. Let's move on to the financing activities. So this is all the money that has moved in and out of Apple's bank accounts because of the financing and funding activities that Apple has done. Now, the question is, what are these activities? These are activities where Apple has raised funding through either the stock markets or the debt markets to run their business. So let me give you an example of this. Proceeds from issuance of common stock, which is a non-existent number in the case of Apple, but effectively what this shows us is the amount of funding which a company has raised from the stock markets. Now, if we talk about proceeds from the issuance of term debt, for instance, this shows us the amount that Apple has raised from the debt markets or from different bonds that have given or from different banks that have lent money to Apple. The other interesting things that we have here, which are very chunky numbers, are repurchases of common stock and payments for the dividend and dividend equivalents. Now, what are these? This is the money that Apple pays to investors who have, to the stock market investors who helped Apple raise money several years ago. And dividends and stock repurchases are a sort of return which Apple is making for those equity investors who believed in Apple's story and who actually gave the money to Apple to become the company that it is today. For companies such as Apple who actually generate a lot of cash, this tends to be a big number. And as we can imagine, Apple has spent nearly $24 billion this year on all of these expenses. Now, when we sum up all of these activities, the cash flow generated by operating activities, the cash generated or used in investing activities, and the cash used in financing activities, it gives us a net number called increase decrease in cash. Now, what does all of this mean? So with that, guys, we've covered all the key items on a company's cash flow statement. Now, again, I want to spend some time talking about the interpretation of all of these items that we've discussed on the cash flow statement, and how would I interpret all of the items that we've just discussed. So let's talk about the three key items here: cash generated by operating activities, investing activities, and financing activities. So what this tells us is that Apple has generated a huge amount of cash from its day-to-day operations, roughly $30.5 billion, a huge amount of money. But if you look at the amount of money or the net amount, if you look at the net change in cash for Apple for 2019, it was minus $8.5 billion. So what does that mean? What that means is that Apple effectively spent $38 billion on its investing activities and its financing activities. Now, why is that? Why is a company like Apple spending, well, 13 billion on its investing activities, which is understandable because, it's spending this money to invest in the capital markets, to spend on acquisitions and buying out new businesses. This makes sense. But what is going on here? Why is Apple paying $25 billion to the equity investors in the form of dividends and repurchasing common stock? Now, this is a very interesting phenomenon, and it is somewhat common for companies of a massive size and scale, such as Apple's. And this is the reality of the world of the financial markets that we operate in, that the equity markets, or the people who have provided funding for Apple when it was a smaller company, they want to be rewarded for having this success story that Apple has in order to keep on continuing to support Apple. In order to do that, they require a return from Apple, which the company provides to these investors in the form of dividends and stock repurchases. These are effectively a cash outflow for Apple, which goes into the pocket of the equity investors. So all in all, what this tells us is that despite making $30 billion this year, Apple actually had a net cash outflow of $8.5 billion. Now, again, this is not for a normal company, this would be a massive amount. But for a company like Apple, this is not a big issue, because if you remember, Apple has around 40 billion of cash just sitting on its bank balance. So even if the cash reduces by 8 odd billion, it does not really materially impact the company's day-to-day operations. But I hope this gives you a sense of how to interpret the cash flow statement and to really understand what is going on around in the company's business. So with that, guys, we have basically summarized all the three reports that you will see on each and every company's financial statements. A company will be reporting this to the market on a quarterly basis or an annual basis. Now, the items that I've discussed here are the items that you should really be focusing on. I have deliberately kept it high level and easy to understand in order to not go into too much detail because I don't really think it's necessary at a starting level. And to be frank and honest with you, to have a good high level understanding of a business, this is what you really need to know. This is a starting point to really allow you to start interpreting a company's business. I'll be doing another course in the coming weeks if you guys are interested to really talk about the interpretation and analysis of the financial statements. Now that you guys have a good idea of a company's financials, I think it really gives you or puts you in a good position to start understanding how to analyze the financial statements. So if you guys are interested, I'm more than happy to do another course covering the analysis of financial statements. So please send me any comments or please feel free to reach out to me if you're interested in learning, and I can surely put something together. But in the interim, please go over the things that we've discussed over the last several videos a few more times to really understand this better, because I think it will really benefit you. And like I've been saying throughout the course, I'm fully available for any questions or queries that you have. So please feel free to reach out to me or send me any questions in the comment section. Now, in the next section, we'll be doing a quick exercise to test your knowledge of the concepts which you have learned in this course. So please give this a try by yourself before seeing the answers, because I'm certain that if you've gone through the course, you'll be able to do these quite easily.